Hi there, welcome to Kneppy Invest. I thought it was up time to do a technical update. I was going to focus on 6 individual companies on the ASX, but after what's happened today on the 10th of May, I thought I'll delay recording the video in the morning, which I usually do, and just wait until the market has closed. It has closed, and we did see, in fact, the Australian markets rally today. More than likely, we saw the rally in the Australian market simply because the American futures are up above 1%. So instead of being down by about 2.5%, which the Australian markets were, the XGO, XAO were down within the first 10, 15 minutes of trading. The XGO actually finished only down by 0.99%, or maybe it was 0.98%. So today was definitely not the day to sell out on open. And in fact, there was one company I was following. Someone sold out $28,000 of shares within the first 10 or 20 minutes. And if they waited later in the day, they could have sold those same shares for over $40,000. So that particular person lost $12,000 by just being impatient and thinking it was Armageddon. Now, the markets were ready for a bit of a bounce. We have seen a fair bit of selling over the past few days. So the markets were oversold. So don't be surprised to see a bit of a bounce. I'm not sure if it's a bounce to start buying shares. It could actually be the sort of bounce where you sell stuff. I'm undecided about that right now. So in this video today, I'm going to go through 6 companies, including Brainchip, because what's happening with Brainchip over the last few days has been quite interesting. And also look at 5 other companies whose share price is right now at really strong support levels. So those 5 companies are looking really interesting right now. But I'll start off with this video actually looking at the Nasdaq, the XJO, and also the XSO, because they're all in interesting stages right now. So what are these other 5 companies I'll be looking at today? Those companies include Novonix, Kogan, Pilbara Minerals, Mesoblast, and Data. Quite a few of these companies are quite popular, or have been quite popular, among retail investors over the past few years and still remain popular. Probably the only company that isn't popular among retail investors but is popular among fund managers is Data. This is a company I could have bought or should have bought about 7 years ago when the share price was less than $2. I, for some reason, decided not to buy, and I've been kicking myself ever since, not literally, not even figuratively, because I don't try to dwell on decisions I've made, because the share price has more than increased by something like 8-fold, maybe not that much, at least 6-fold since I decided not to buy. And my whole philosophy is don't dwell on decisions you've made that didn't turn out to be the right decisions. Learn from those decisions, and that way you can become a better investor in the future. Now let's have a look at the Nasdaq, and then we'll have a quick look at the XGO and the XSO. I am definitely way more bullish, or bearish, I should say, in regards to the Nasdaq right now. This is the daily chart going back to June last year, and the Nasdaq is in a well-defined downtrend and has hit support right on 12,200. It has gone through the previous support, which is around about 13,000 on fairly good strength, so pretty good volume as well. And it is moving lower at quite the speed right now. And I do think because we've had 2 really big down days in the last 3 trading days, I think the Nasdaq is in store for a bit of a bounce. The futures are up. The other reason I think it's in for a bit of a bounce is just because it's right on some good support level. That support level was created way back in 2020. And if we actually go back, this is that support level here. That's the time when the Nasdaq rallied from the COVID-19 lows all the way up to 12,200. And it took a little bit of time to get through that level. So that resistance level then became support. And we're testing, or the Nasdaq is testing, that support level right now. So if the Nasdaq does fall through that support level, 12,200, or around that level, I'm not sure what the next support level is, but this is definitely a bearish looking chart right now, and just don't know how low this could go. This could be the bottom. Who knows? We just have to wait to see what happens in the next week, next few months, but it is looking bearish right now. Now, if you focus now on the XGO, nowhere near as bearish as what we've been seeing on the Nasdaq, but the XGO has been trading sideways, and we've had 3 big down days in a row. In saying that, really good trading today. As I mentioned before, the XJO was down at the open. And if we have a look at the 5-minute chart, you can actually see this really well. So in the first, this is 5-minute chart. So the first 20 minutes, the XJO fell all the way down to a bottom of around 69.40. And then during the rest of the day, we saw the XJO rally from 69.40 and close at 7,050. So it rallied over 100 points during the rest of the day. And I think one of the reasons it did rally was because American futures was up. And I did see a few companies' share price rally by significantly more than that. There are a couple of companies I do own whose share price increased 18% from the lows of the day. So I do think there is potential. This was capitulation. Those who wanted to sell and they were really scared, which is sort of capitulation, they sold out near the bottom of trading today, particularly those amateur retail investors selling out because of the fear. They saw the share market down 2.5% in the first 20 minutes. These are sort of days you just want to hang on, see if there is a bit of a rally, not only today, but over the next few days. So really interesting trading today. And I think this is leading to a positive, potentially positive day tomorrow, which is the 11th of May, which hopefully could run in the rest of the week. And maybe we could finish the week in the green. Now, very similar thing happened with the XSO, which is the small caps. We saw the XSO get down to 29.30, 20 minutes of trading today, and then rally and finish at 3,008. So a nice day for the XSO. But this is a little bit more bearish than the XGO. And you can just see it went through some pretty good support levels. Right there's a support level as well, around 3,100. But in saying that, just look at the candlestick today. You can see a very long tail to the bottom side, which is telling us there was a lot of buying during today. And that's actually a fairly bullish one-day candlestick. Doesn't mean we will see the market rise from here or the XCSO rise from here, but this is a good sign that we will see some positive days over the next few. Now let's get into the individual companies, starting with Brainchip. The main reason I decided to look at Brainchip was just how Brainchip has performed over the last few days when the overall market was down a lot. Brainchip share price actually rallied from about 90 cents all the way to a high of about $1.23. We can actually confirm this, a high of $1.22.05. So I wasn't sure why the share price was rallying because the company released no news, but I did actually go to Hot Copper and there was some information that the company did release some news on their website, and that could be the catalyst behind the raised interest, enhanced interest in this company over the past few trading days. However, when I see a breakout or potential breakout in the share price, and this was a potential breakout, there are two things I am looking for. The first thing is I would prefer the breakout to be or coincide with some positive news, positive financial news, or a large deal from the company. So that did not happen. There was actually no news flow from the company, no official news flow from the company. The other thing is I always look for at least a 6-month high when the company share price might be breaking out. And the whole reason I'm looking for at least a 6-month high is to see less resistance for the share price to move higher. So if we just zoom in on Brainchip and look where the share price is now. So it finished today on the 10th of May at $1.02. In fact, it dropped 16% today. And the reason it dropped is because there is a lot of resistance for the share price to move higher. So what I mean by resistance, if we go back through from January this year all the way to about March, their share price was significantly higher than it is now. So a lot of holders, current shareholders, whether they be investors or traders, bought in at higher prices. Now, the psychology of the everyday investor is as soon as the share price falls below where they bought, that company automatically becomes a dog stock and they need to sell. This is real thinking from a lot of investors. I have heard this a lot of times, even from my colleagues at work. So when someone bought Brainchip at $2 or even $1.50 and they saw the share price fall below the time or the level they bought in, they need to sell the stock. And when they see the share price rise, when the share price rallies, like we've seen over the last few days, they've given the opportunity to potentially sell out their shares. Now, what I want to see is the share price consolidate for a long period of time. And the reason I want to see the share price consolidate over a long period of time is those particular shareholders who bought in high prices become bored, and eventually they will sell out during a period the share price goes sideways. So the share price consolidates for about a year. There won't be many of those shareholders who want to sell out left because they've all become bored and they've sold out. Hence, when the share price does break out, there is less resistance moving forward. I have seen this time and time again. The best chance a share price rallies on a breakout is when it is after a long period of consolidation, at least a 6-month period where the share price goes sideways. And we just haven't seen that with Brainchip. It's only been about 2 months since we've seen the share price this high. Now, let's have a look at some of the other companies I want to talk about. And the first one is Pilbara. This is the weekly chart going all the way back to 2015. This is the sort of company you wanted to own when it broke out in late 2020. Share price back then was about 40 cents. Current share price is $2.53. But I don't really want to focus on the long term. I just really want to focus where the share price is right now, because the rest of the companies I'll be featuring in this video, the share price is at really strong support levels. Maybe not really strong, but at least moderately strong support levels. So if we go to the daily chart and zoom in where the share price is right now, there is a really good support level at around $2.48 to $2.50, which was created back in August of last year when the share price rallied to about $2.50 and then slipped away. It rallied again to $2.50 and then slipped away again. So $2.50 back in August, September last year was resistance. And eventually the Pilbara share price went through that resistance in September. So that resistance level became support. So just keep in mind, $2.50. The share price almost touched $2.50 in March this year, and then we saw another rally. But on the 9th of May, the share price fell to about $2.54, if I remember, 56 cents. And I thought today was going to be very important for Pilbara share price because the share price was right on that really strong support level. The share price actually opened below that support level. In fact, if we go to 5-minute chart here, and we can keep the resist or the support level here, share price opened much lower on open. So again, just mirroring what happened in the overall market. And then we saw the share price rally through the rest of the day. And in fact, the share price opened or closed higher than that support level at $2.53. It was down from the close of yesterday, but the low it did see today was around $2.37, which was significantly lower than that support level. So it's very fortunate, not fortunate, but it was really good that the share price of Pilbara Minerals did rally today and push the share price back over the support level. There would be some traders out there who would have panicked, who would have seen the share price open below the support level and might have sold out in the first 1 hour, or maybe even less than that. Well, the first 2 hours, we'll say, when the share price was lower than that support level. But just because the share price does fall below the support level for a brief period of time doesn't mean that support level has been broken. We need confirmation. I like to see the share price below support or above resistance for a number of days for confirmation. We haven't seen that right now with Pilbara. And the very fact that I do think there will be some upside in the markets over the next few days, this could be a low risk buy opportunity for those who are bullish in the short term for Pilbara Minerals. Another company I follow quite closely, even though I am not a shareholder of this company, and I have no intentions of being a shareholder of this company for a while, is Novonix. Now, Novonix was a market of the darling during the later period of 2021 through to the start of 2022. We saw the share price rally from about $2 all the way to a high of $12.50. But the share price has been under pressure since that high, which was towards the start of December, if I remember correctly. There was a massive big down day, which was sort of a warning sign. Share price fell 32% in 1 day on no news. So that is a warning sign. The share price is overbought and there are some profit takers out there. And ever since that day, we have seen the share price under pressure. But there was a really good support level at $4. And that support level was created way back in January 2021. You can just see this rally in the share price in January of 2021 when it went from about $1 all the way to $4 in 1 month. So the share price quadrupled in 1 month. And whenever I see the share price exponentially rise, like we did see with Novonix, there will always, almost always be a little bit of a pullback in the share price. You see this time and time again. If we go back to Brainchip, you'll see this time and time again. Here's, just go back in time. No, we won't go back. You can see back in 2020, share price of Brainchip went exponentially higher in September of that year, and then we saw a pullback. And it happens time and time again. It happened again in January 2022. Share price exponentially rose, and then we've seen a pullback. So whenever you see the share price exponentially rise, don't get caught up in fear of missing out. You will have an opportunity to buy in at a lower price in the future because of that pullback. So that's what we saw in Novonix way back in, what was it, 2021. And the high at that point in time was around $4, which was resistance. And then the share price remained below $4 for the next 8 to 9 months. And eventually it pulled through that resistance level in August of 2021. You can just see the share price hovering around that level, $4 there for a few days. And then it pushed through on some good volume and remained above $4 up until right now. And we have seen share price fall from that $12.50 to $4. But look what's happened over the last few trading days. So on the 9th of May, the share price of Novonix fell 12.3% on increased volume. And then today, the share price, just like Pilbara, opened below that support level, and then it rallied during the rest of the day and actually closed at $4.03. You can actually see that if we look at the 5-minute chart. Just like Pilbara Minerals, share price opened lower, and there was a lot of buying, a massive amount of trading in Novonix in that first hour of trading. You can't see it in this. So actually, let's have a look at ComSec. You can definitely see the massive amount of trading in the first hour of Novonix today on the 10th of May. Just looking at the one-day chart here, just zooming out a little bit, you can see massive volume, huge amount of volume, abnormally amount of volume when the share price was below that support level. So there would have been a lot of people selling out because they saw that support level broken, and then the share price rallied and went above $4 on some good strength. So the support level for Novonix has not been broken. We need confirmation. And again, just like Pilbara, I do think there is a possible rally in the market over the next few days. So now could be a good time to take a position in Novonix for the short term. And hopefully this support level remains intact for a long time yet. So that's Novonix, a possible buy-in for those who want a short-term trade, at least, maybe even a medium-term trade. So let's have a look at ticker data. So those retail investors probably don't know much about this company. I won't look at the 5-minute, go back to the day chart. So the reason I like ticker data, and if we go back actually look at the weekly chart for this one. So if we go back when the share price was, here we are, 2016, see how the share price was rallying through 2012 all the way through 2018. Around about here, we saw a little bit of a dip, late 2015 to 2016. That's when I was possibly taking a position in this company. When I saw that dip, it was less than $2, and I decided not to for various reasons. And even though I'm not really kicking myself, I have learned my lesson. The main reason I think I didn't take a position in this company was I saw that their operational cash flow was actually negative for the financial or the previous financial year. Then the company became operational cash flow positive, and that's when the share price went on a bit of a run. The share price currently is $12.27, and we can just see, looking at the weekly chart, the share price has really gone on a run since January 2019, when the share price was about $2.90. But the most important thing here, and the reason why I'm looking at ticker data, is just where the share price is right now compared to support levels. So there was a breakout in the share price for ticker data on the 2nd of August last year. Share price actually increased 16%. So there is a possibility that was on some financial news. You don't usually see share price rally like that on no news. There was increased volume as well. And there was a resistance level at $12. It went through that resistance level and then rallied all the way up to a high of $16.50 by the end of August. But the share price of ticker data has been going sideways ever since then. And the share price on the 9th of May was just above a really strong support level at $12, which was the old resistance before the share price of Dicker Data moved through that on the 2nd of August. And we have seen the share price reach $12 twice before, back in October last year and then again in January of this year. And both times the share price of Dicker Data hit $12, we did see a bit of a rally. And again, just like a few other companies in this video, the share price of Dicker Data went through or opened less than that support level at $12. And then we saw a rally during the day that pushed the share price above that level. So there was a potential break in the support level, but that has not been confirmed. And that potential break has failed. So just like Pilbara Minerals, just like Novonix, this could be a low risk buy-in point for the short to medium term for Dicker Data. And this is also, I won't say a high quality company, but definitely a good quality company with some good dividends. So the dividend yield for this company is quite good. And also the share or the company is growing at I won't say a good rate, but a very honorable rate anyway. So let's have a look at Kogan, which has been a company, if you've been a shareholder over the past few years, has been very volatile. So I'm not sure what's happening with TradingView here. The volume is all over the place. So I have to go to another chart. So this is the weekly chart for Kogan, all the way back to when they listed on the ASX in 2016. So really volatile, a massive bull run from March 2020 all the way to the high of $26, which was reached in October of 2020. So you really wanted to be a shareholder at that point. But the share price has pulled back all the way back to the COVID-19 lows we saw in March 2020. Just look at that. The share price is right now at $3.50, which was the low we saw during COVID-19. That's why I've put this line in here. So that's why I'm interested in Kogan right now. Just let's have a look at the daily chart. So the share price hit that support level, that COVID-19 low on the 9th of May. And in fact, we did see a bit of a rally in Kogan share price today on the 10th of May. In fact, the share price rose 2%. And just like some other companies, let's have a look at the 5-minute chart. And just like every other company, the share price of Kogan opened at the low, and we did see a rally during the day. So again, another possible buying opportunity here. But the daily chart does look really weak. A lot of negative sentiment around this company. You can just see the share price. If we go back just 1 year, so this is about 1 year, the share price during the past year has been as high as $13.50. Now it's $3.50. So a lot of resistance moving forward with Kogan. This is the sort of company I want to see the share price move sideways for a long period of time so all those shareholders who have bought in at high prices over the past 18 months have the opportunity to sell as the share price consolidates. If there's another possibility here, if the company releases some good financial news, that could also be the catalyst for a change in sentiment around this company. But at this point in time, Kogan is getting to a valuation of share price that is looking more and more enticing. I think most of the bad news is priced in. However, the management of this team, of this company, keep disappointing. So I think I would like some new blood in the management team. That's what I would like. But I think online retail is the future, and Kogan definitely has a spot in that future. And I think this is the sort of situation like we saw with Amazon back in 2000, when the share price dropped from like $100 to $6 or something ridiculous like that. Sometimes we do see this in good quality companies, and this leads to opportunities to buy good quality companies at really good valuations. The question is Kogan a good quality company, and will we see a turnaround? I think the best way to play this, and the way I'm playing this, is just wait for confirmation that there is a turnaround in the Kogan story. You might have to wait a while, but hopefully that's what does happen for those shareholders who have seen their capital absolutely destroyed by the share price performance over the past 18 months. Now let's have a look at Mesoblast, which is sort of company. I have held this company in the past. Back when we saw this massive amount of volatility in late 2020, you can just see the share price jumping around on good news and bad news. That's not really the sort of company you want to own, because you just don't know how the share price will react on any news. You can see there was one day here, share price dropped 37%. There was another day where the share price rose 11%, and then the next day rose 18%. Another day, the share price dropped 36%. Another day here, the share price rose 41%. Now, the reason why I've included Mesoblast in this particular video is just where the share price is right now. So if we zoom out to the weekly chart, you'll be able to see, and we just zoom out a little bit more here. So this is the last about 7 years. So this goes all the way back to May 2015. And I put a dashed line, horizontal line, right on $1. So why I put that horizontal line right on $1? Two reasons. It's actually quite powerful support level, because every single time we've seen Mesoblast share price hit $1 over the past 7 years, we have seen a share price rebound. It happened back in 2016, right here, May. Also happened in December 2018, also happened during the COVID-19 financial panic, and it happened just a few weeks ago. We actually saw the share price rally. As soon as it hit $1, share price rose 25% in a few trading days. So what is the share price doing right now? Let's have a look at the daily chart. And we can see, in fact, if we zoom in a little bit more, we can see it was the 7th of March. Share price actually fell through support, or the support level at $1 for a very brief period of time. In the next few days, the share price rallied from $1 all the way to a high of $1.26. That was not a breakout in the share price. That was just traders buying because the share price had hit $1. And then a few days later, I think there were some excited people, excited retail investors getting excited that the share price was rallying, looked like it was rallying, but it was definitely not a breakout in the share price, because then we saw volume really retreat from then on, and the share price fell back to $1. Share price finished right, or closed right on $1 on the 9th of May, and today the share price has fallen through. So there was no rally in Mesoblast share price. It closed at 98 cents. Let's have a look at the 5-minute chart. You can just see the share price opened below that support level, and there was not any rally, just like we've seen with other companies today. In fact, the share price actually slipped away in the last few hours of trading and closed at 98 cents. The low today for Mesoblast was 97 cents. So this is actually by far the most bearish chart we've seen today, simply because the share price of this company could not rally. So maybe, just maybe right now, this strong support level at $1 for Mesoblast has been broken. That's all I have for this technical update on Brainchip and 5 other ASX companies. Also looked at the Nasdaq, XJO and XSO. If you have any questions about anything I've talked about today, any companies I've included in this discussion, well, it's not really a discussion unless you call a one-way conversation a discussion. I'd love to hear your thoughts, so leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.